Welcome to this podcast. Before we start, please remember to subscribe to this YouTube channel by simply clicking on the subscribe button below this video. This will ensure that you always get our new and updated podcasts on transfer pricing. Okay, let's jump right in. In today's podcast, we will be summarizing a recent transfer pricing case. Let's take a look at Russia vs. ViciunaiRus LLC, April 2020, Supreme Court, case number A21-133-2018. The company was engaged in the production and wholesale distribution of its products. During the inspection concluded that the chain of contractual relations between the company and its sole official distributor, in the Russian Federation, artificially had established intermediates that do not have assets and personnel. At the same time, the price of products increased by more than 20%, in the course of movement along the chain of counterparties. During the period from 2012 to 2014, the tax authorities considered the inclusion of intermediaries in the sales structure to be of artificial nature and aimed at understating the sales revenue. The taxpayer was additionally charged profit tax and VAT, and the additional tax was calculated based on the resale price, at which the goods were received by the distributor. In 2012 and 2013, the transactions between the taxpayer and distributor were controlled. In 2014, they were not. The taxpayer objected to the tax authority's decision. Among other things, the taxpayer argued that the tax authority was obliged to apply the methods of determining market prices set forth in Section V.1 of the tax code when making additional accruals, but applied a different method. The Court of First Instance and the Court of Appeal concluded that the tax authority had exceeded its authority to make transfer pricing adjustments during the tax periods under review for controlled transactions between related parties. With regard to the amount of additional accruals for the period of 2014, the court rejected the taxpayer's argument that the tax authority was obliged to follow the methods of transfer formation when calculating the tax liability. The applied method of additional accrual, the use of the price of the last link in the chain of intermediates, was recognized by the court as lawful. The Supreme Court canceled the decision of the lower courts and sent the case back for reconsideration. The conclusion of the lower courts that in the period 2012 to 2013 the inspectorate carried out price control for compliance with the market prices was erroneous. The price control was not carried out, but a set of circumstances was established, testifying to the coherence of actions of interdependent persons in order to obtain unjustified tax benefit. Taking into account the proof of the fact that the company received an unjustified tax benefit, the tax authority correctly calculated the income that the company should have received when selling goods directly to an interdependent person without using intermediary firms.
Thank you for listening to this podcast. Remember, click on the subscribe button below this video to always get our new and updated transfer pricing podcasts. Have a great day.